Hi everyone. So in terms of stay-at-home stocks, Netflix and Zoom, I've had so many questions. Buy, sell, hold, what to do with them. So let's have a look. Let's do a quick bit of analysis. That is Netflix. And of course, well, since 2014, it's had a wonderful run up. It's gone from around 100 where it was hovering at to a five-fold increase in its share price to 500 now. What about going forward? Well, I'm not just going to look at the share price, which if you look at this particular measure of momentum that you can see down here that I'm hovering at, it would suggest it might be ready if history repeats itself, for having a little bit of a dip and a decline, and it's already started coming off a little bit. What I'm really interested in are these figures, these little beauties. Let's move my fat face out of the way a little bit. Okay, and what do these figures tell us? Well, yeah, they repeat the fact that it's had 12% returns, 55, 39, 20, 67, all goods, off 7.8% so far this year. What's causing that? Let's break that down into confidence, valuation, forecast growth, safety, dividends, quality. Basically, let's deep dive into their balance sheet, their profit and loss account, and their cash flow statements. Well, whilst brokers think it will outperform, they're only giving it from current levels a target price as a consensus of about 10% rise from where it is. That doesn't really compensate me for the kind of risks that I could be facing. And the biggest risk I could be facing is free cash flow. Okay, this is priced to free cash flow. It's really the cash flow aspect, which is part of the valuation. Okay, it's got a lot of borrowing to make its content. It's got a hell of a lot of spending, far more than it's getting in from subscriptions, despite the growth from, India and wherever else you might say. Cash flow, cash return on capital invested is negative. All these things are worrying me somewhat. Now, you might say, well, maybe it'll just keep riding up on momentum. You're absolutely right. It could do on momentum, speculation, etc. That suggests to me I'd rather look at other things. Thank you very much, Netflix, for the lovely ride up. I'm going to look at a few other things instead. So let's go to Zoom. Okay, this is Zoom. Don't forget there's two Zooms, two companies with exactly the same bloody name. Yeah, you can get away with that in America. Again, something which hovered around 100. They'd IPO'd the month before I met the CEO in Silicon Valley. Okay, so the CEO I met in Silicon Valley, and a month before that, they'd IPO'd. And back then, I didn't know who he was or what they were. Anyway, they were 100. They peaked at about 500. Now they've come off a little bit. Further lockdowns mean what? Well, this could be bottoming out, actually. It could be nicely bottoming out to resume upwards again, because it's come off its peaks and dipping down, as you can see. And a lot of people have got out of it. They're sold out of it. But what do the fundamentals tell us? Let's look at the fundamentals again. Okay, again, outperformance is what people are saying. Target price, 20% to the upside. You might say, oh, I'm not sure that compensates me. And it's given you some great returns so far, 112%, 395%. Thank you very much. That was the bulk of what we had last year. Up 14%. Okay, price to free cash flow. Again, bit of a problem because 857. That's, yeah, we've got a bit of a problem in terms of they're getting lots of cash, but it's really priced in optimistically on that front. And Zoom, like Google and Amazon, have become household words like Hoover. Okay, everyone talks about we're going to zoom in, and that's got to help. So between Netflix and Zoom, I'd probably be more inclined to have Zoom, but actually I want companies which are not going to be so expensively priced. Lots of ability to generate cash. They've got a wonderful business which can generate cash for the simple reason that they don't really have to do tons of capital investment, and they just get subscriptions. And as they did with people like me, they just say, oh no, your rates are higher. Sorry, you can't have the cheaper plan. We've got rid of it. Okay, and I had to pay more. Well, actually, I switched to somebody else. Important lesson. I switched to somebody else. So it's better than Netflix, but would I want to get in right now? It's not ticking enough boxes for me, I'm afraid. It's not bad. Could rise, yeah, but I would say could rise 20%. I really want things which are going to rise 40%. So watch this space for more which will fit my criteria. Okay, this again, a bit too expensive for me. Don't forget, if you're on LinkedIn or YouTube, if you're on YouTube, subscribe, bell, all the rest of it. You young kids know what to do on LinkedIn. Please add comments. Happy to answer any questions. Any stocks you want me to look at in future as well, happy to give a quick analysis of those. Go to www.alpeshpatel.com to get access to my free Telegram channel, free investing materials and videos and all the rest of it. Hope you enjoyed it. Thank you very much.